Okay, hi everybody. Today I would love to discuss when is the best time to enter a trade. So there's basically three different camps here. There's the end of the day, there's the open, which is probably the first 5 to 20 minutes, but we'll call it the first 30 minutes. And then we'll do, after the open. So 30 minutes, an hour, 2 hours into the session. When is the best time? What are the advantages? We're going to talk all about it right here. And then I have some perfect examples to explain my thinking when discussing what time of the day to enter a trade. So with end of day, you if you're very selective and you're very rules based, you can have a win rate up to 70%. And that's a huge mental hurdle for a lot of people, because when you are trading at the end of the day, you are avoiding false breakouts. You are on the screens less because you're not focused on the morning, and then you're not focused on managing. So you're not so much watching the market, which is really good for a lot of people's mentality. So, and their psychology. And typically when you are trading at the end of the day, you are not really working off of a focus list or a watch list. You are using some type of scanner that is bringing you the results. And so that helps a lot of people as well. And then once you trade at the end of the day, right, you have the full picture. You have the full day's candle. You have the full day's volume to have all the information you need to determine if that is a good day to enter or not. So the trade-off is, of course, there is going to be less risk to reward, because the position size will inevitably be a little bit smaller than if you trade right at the open. So there are ways around that. And then, of course, you are going to miss fast runners, big squeeze moves, gap and goes. There's a lot of things that you will miss. But with that, you are lowering the amount of noise and blinky lights in front of you. So how do we trade end of day? To make up for the risk to reward equation, you would trade with a bigger size. So trading with a bigger size works out because your win rate is higher. So you can afford the bigger size, the wider stop loss, because that win rate is higher. You will inevitably have to take a bigger peel, or you are all in and then you're all out. So in this scenario, you would sell everything at 3 days or 5 days, or at your designated risk to return ratio, whether that's 2R or 3R. You're not really going to get those 8, 10, 14 Rs like you are going to get with different time of the day that you enter. But you must have strict buying rules, because if you're buying at the end of the day and that entry point is way past any sort of solid level on the chart, then you are buying extended. You're not necessarily buying extended if that entry point aligns well with a breakout level. So we'll discuss that for sure in a few minutes. So at the first 30 minutes, your win rate is going to be much, much, much lower. So 30%, 40% if you're really good. You could even be down to 25% win rate. And so you're definitely going to max out risk to reward, and you're going to have a nice big cushion into the close. That's really great for other people's psychology. Okay, so this needs to align with who you are and what you are expecting and what makes you comfortable. But it does allow for some emotions to get into your trading, because you will have false breakouts, you will have shakeouts. Typically, you are buying before that breakout level. And when you're doing that, you're anticipating it. And oftentimes, it's not going to work out. And so you do have this opportunity to want to make up for the losses, because sometimes you have to try 2 or 3 times in the same day, in the same 10 minutes. And so that can really bring up some bigger emotions. How do you trade this? Well, you need to trade much faster. You need to take quicker peels, and you need to have a focus list that's ready to go. A few names to focus on, alert set, be very dialed in, and operate in this tiny bubble so that you're not looking around for stocks while everything's flashing. Okay, so 30 minutes and beyond. So this is more of a hybrid and a balanced approach. 40 to 60% win rate, just depends on the environment. Much more balanced RR, which means that you can have still that bigger size, but a smaller distance from that stop loss. You will have more confirmation because you will see the range expansion. You will see the volume coming in that you won't see quite at right at the open. That's still just a lot of the times that first 15-20 minutes is typically going to have a higher chance of that fading. So waiting 30 minutes and beyond, you will really see what is going to stick and what's not going to stick. But at the same time, you will also have a chance of missing fast runners, big squeezes, things like that. And of course, things can always fade later into the session. So how do we trade that? Well, you can always start with a overweight position, and then you peel at a lower risk to reward. So having an overweight position and then peeling at 2R rather than waiting for a 5R, you can do that. And again, you can have a mix of using a watch list or a focus list, and then of course you can have breakout scanners and things like that. So with all that being said, I think that the time of the day is less relevant than where is price at the time of buying. So you need to ask yourself, is the stock breaking out, or do I think it's breaking out? And so it could be in the first 3 minutes, it could be in the first 45 minutes, or it could be right 10 minutes before close. So we're going to go over some examples to explain that the time of the day should not be your primary focus when entering a trade. It should be once it's at that breakout level is when you execute. So you enter at the time of the breakout. Okay, so let's go over a couple examples. So Credo is a great example of a really good delayed entry. So you have this back-to-back gap ups, nice tight ranges, and then you have this huge day on May 20th. So just looking at the chart, you can see that there are a few levels that we can focus on. And we'll draw our attention to the previous day high. We will also use the April 16th candle as a level to view. And then also we'll use that momentum swing high on April 15th. And let's take a look at an intraday chart to see exactly when this stuff is happening. So April 20th. So this is the first 5-minute candle here. So in the first 5 minutes, it was still trading in the range of the previous day candle. So entering here, you are anticipating that's going to move higher. So you have to ask yourself, is the stock breaking out, or do I believe it's breaking out? Here it's not breaking out. Here it's not breaking out. So 5, 10, 15, 20, 25, 30 minutes. So right at 30 minutes, you are breaking out above that previous day high. Okay, so if you enter going through here, you are using the previous day high as a trigger. But let's back up a second. So if you're using the previous day high, is the stock actually breaking out, or do I believe it's breaking out? So it is, if you just measure the range, it's 3.27. So at that time, it's 3.27%. But what is the ADR? The ADR is 7.5. So it's not even half the typical range. So is it breaking out? No, it is not breaking out at the time of it trading above the previous day high. What about if you waited later into the session? Okay, so now it's breaking out above this level. It's breaking out, nice push, good volume on the 5-minute. But let's take a look if it's actually breaking out or if we think it's breaking out. So there would be about 4.5%. 4.5% ADR would be what? Would be more than half. Okay, so it's trading a little bit higher. Okay, it's pushing past these 2 days, these 2 closes. And could you take it? Sure. Okay. So now we're getting later into the session for an entry. But it's still not really having that big range expansion that we really want to see. Now, with that being said, if we want to measure, because I measure range expansion from the body of the candle and also the full day's range. So the full day's range is not expanding. However, if you compare the previous day body, which was only 1.62, and the body of the candle will be 4 times the previous day. So the body is having a big range expansion. The previous day, or if you're using the previous day high, so that level there, 3.2 or so. So just barely. So anything above this level into here is an appropriate place to enter because it's showing the signs of a real breakout. Now, if you waited to the end of the day, you would confirm that it has fully broken out, but it is a bit extended. Okay. Now, I'm not going to say that it's extended from the low of the day, but it certainly is extended from the breakout point. And so I'm more focused on whether it's if it's extended from the breakout point than I am if it's extended from the low of the day. Now, will this work? Yes, we know it will work just because we are doing a replay here. But with that being said, if you are uncomfortable buying because you feel like you can't get enough size, if you are treating every stock, every chart like this where you're drawing out levels, you can trade on a 5-minute chart against these levels. So you could certainly enter at this 169 and use the 166 as your initial stop loss and your initial sizing. So you could buy into 169 here, buy into this area here, and use this as a stop loss. And right there, you have yourself a very nice, 2% distance from the stop. And and you can get a huge size on that. Then you peel, and then to swing it, you move it to the low of the day. So that's one tactic. Okay. And so we're being flexible. We're not being tied to an end of the day, a first 30 minutes or 30 minutes plus. We're not being tied to that. What we're doing is we're waiting for it to actually show the breakout. And when we do that, our win rate will go up because we're waiting, we're not anticipating. This is the only time that we really need to slow down, is when our win rate is 30 to 40%. For me, I don't want a low win rate. I want a higher win rate. So anything I can do to improve that win rate, even if I'm trading the first 20 minutes, first 15 minutes, I'm trying to make sure all of these things are aligned. The range expansion, the levels, all of these things, to improve my odds of that being a winning trade. But there's just so much noise in the first 10, 15 minutes. Okay, what's another example? FTNT. This is a great example of a false breakout. So we see here that if we are looking at the previous day high as a trigger, the first 30 minutes, okay, so it shoots up in the first 5 minutes, but then it closes lower. Okay, so had you taken that position at 163 right out the gate, you could have used 159. Okay, so your stop loss would have been very tight, 2.4%. What would have happened? It would have went up and then it would have faded on you. Okay, so where's the problem here? Because sometimes this happened. The problem is, at the time of entry on a 4.27 ADR stock, at the time of entry from the low to the high was 2%. So is the stock breaking out? The answer is no. So you need that to push, again, the ADR, 4.27. So let's just look at what 80% of that ADR is. 80% of the ADR would be something around here. Something around here, so 165-ish. So if we look at a 5-minute chart, is there anything significant about, what did I say? Is there anything significant about, oh shoot. We'll go 166. Yeah, so we'll go 3.8%, which is 166.22. 166.22. So is there anything significant about 166.22? We'll draw a line around it. 166.22. Okay. So is there a level here? Is there something we can trade from? Well, there actually kind of is. So if you look at a chart here, maybe we go to 30 minutes. Okay, we do see if we run, there is some, you got two little wicks here. So if you just slide it up just a little bit, you can see, okay, I'm going to use this as a level here to trade off of. So this level here, we're going to use that as our reference point to, this is when we determine if it's a breakout or not. And again, if we're concerned about risk reward, we can always use the other levels on the chart. This seems like a significant level here, right? So we want to dig down into the charts if we're going to trade a little bit later, if we want to improve our win rate, right? So you have all these touch points here, touch points here. Okay. So what we're wanting to do is drop down a level. And if we're going to base our entries on whether our stock is breaking out or not, and we're a little bit worried about risk reward, then we want to size based off of intraday, but they need to align with daily breakout levels. Okay. And that is a combination of everything we've discussed and is a hybrid approach where you're still able to swing trade off the daily chart. Okay, because we're looking for daily range expansion on a momentum stock that's showing tight and orderly consolidation. We want to see a range expansion out of that, but we drop down to a 30-minute or to a 1 hour or a 10-minute. And we look for these levels to trade off of where is the range expansion, and does that align with an entry point on the daily, and does it align with our style, and are we going to enter this trade anticipating the breakout or waiting for the breakout? And so we have to ask ourselves every time before we enter a stock, is the stock breaking out, or do I think it's about to? As soon as we anticipate or we front run that breakout, we are going to lower our win rate. That is exactly how that works, because we are anticipating it. So we're adding in a element of unconfirmation decisions that's not confirmed, unconfirmed decisions. So if you have questions, please let me know. I highly recommend that you dig into this, look at other examples where there's levels on the daily, you draw them out, you drop it down, and then you see, okay, where can I enter here, and what time of the day is it? Okay, and does the time of day even matter? Okay, do not get fixed on end of day. Do not get fixed on I'm never trading the first 5 minutes, or I'm only trading the first 5 minutes. And don't get stuck on oh, the stock is too far gone, it's too extended. You need to remove that, because there's ways we can adjust. If then this. If that, then this. Okay. Please let me know if you have any questions.